G'day guys, how we doing? Jeff with you, coming to you live from Tasmania, Australia, and hoping you're having so far a wonderful day. And I hope that continues. If you're not having such a good one, I hope it improves. Okay, we're flying solo today. Ash not with us. He's in the air currently en route to Singapore, where he's got some engagements to do with Actions to Wealth, of course, and anybody in Singapore, if you can catch up with Ash over those 3 or 4 days that he's there, suggest you do and have a good old yarn. You might even buy you a beer if you really. Anyways, today, what are we going to do? Well, I'm really on about market sentiment at the moment and trying to work out market sentiment at the moment, and indeed looking for ways to take that into the market as such. And tell you what, although I've been around charts for about 12 or 13 years, I'm really struggling to find why the market is how the market is. Yes, we can talk about Brexit. Yes, we can talk about trade wars. We can talk about all sorts of things. Why the market may be just a little bit iffy or indecisive, but it really is, and I just can't get a good grip on it. I'd just like to get on a week's break, I think, and come back and shake myself and say, well, okay, that was fun. Now what? Anyway, that's not to get in the way. What you need to do in those circumstances is just sit there and try and work it out. And I'll do exactly that today. I'll talk a little bit about Brexit. 1, 2, 3. There you go. Done. Finished. No more Brexit. No. Look, you've got to talk about Brexit, I suppose, but it is the elephant in the room in many regards. I actually don't follow it. The only time I get to talk about Brexit and even think about Brexit is when Ash is in the room and telling me exactly what happened the day before, what may happen in the upcoming day. Look, I know there's another vote coming tomorrow, or the summit tomorrow, where they will apparently say yay or nay to an approach to the Euro people to extend Article 50. Sick of hearing that word as well. Article 50 and Brexit, they're kind of hand in hand, I guess. But I don't know what the outcome is, so there's no point in me talking about it. To be fair, I'm only just going off at the mouth with really not knowing what I'm talking about. So I'd rather not do that. And if you've got any ideas on Brexit, please feel free to put them in the chat box. I'm only too willing to hear someone else's opinion, but I'm really not going to give you much of mine because I have very little idea, to be fair. And I've got absolutely no idea what the outcome is. I've got no idea what the market will think if they go this way or that. So it's really a case of I don't care. I'd have to do too much work, and I'm lazy by nature, so I'd just have to do too much work to get into this Brexit situation. So let's leave that one alone. Trade wars is another one. I know a little bit more about trade wars than I do about Brexit. Apparently China are considering or have or will, whatever, backing down or withdrawing their promises that they've made to the US around the IP breaches and protocols. So that could be interesting for the market as well. Again, what the market does in reaction to that is, well, I don't know about anybody's guess, but my guess is it ain't going to be great for currencies like the Aussie, perhaps. We will see how that works. The Fed, of course, are meeting overnight. It's overnight for most of us. So by the time we come here tomorrow, the Fed will have voted on their interest rate for the quarter. Well, almost a quarter. They meet 8 times per year. That will be interesting, of course, not so much if they don't move, but what is said in the statement. And I think there's a press conference that goes with this one. Just hang on a second. Why don't we consult the Forex Factory? That's probably a good idea. There we go. There is indeed a press conference half hour after they announced the federal funds rate, which is widely predicted to be stable at 2.5%. But the Fed have said that they intend to raise interest rates twice in 2019. Thus far, that hasn't happened, of course. And will we be seeing them back down on that particular stance? Already they've indicated that there's more of a dovish approach than a hawkish approach, and we may see a statement that says, well, okay, we're downgrading the forecast from 2 to 1. The market will react to that, and we can expect to see a weakening US dollar if that was to be the case. If, however, they just continue their rhetoric of the past couple of statements, then you're probably not going to see too much in the way of movements. That said, I do have a favourite trade that I like to set for the FOMC, and I'll have a look at that a little bit later and see if we can set that one in action around about 6 p.m. London time, which of course is still 8 hours away. What time is it in London? It is approaching 8 o'clock, so 08 becomes 18, 10 hours away. All right, so we've got plenty of time to wait on that one. There's a whole lot happening today. CPI figures coming out on the pound. The Brexit thing continues to be over our heads. We've got the FOMC press conference, as I said, and trade wars continue, as I said. Aussie tomorrow, we've got employment figures. Swissy has got their LIBOR rates, and on Thursday, rather, as does the pound. The MPC will meet and determine that they're not going to do anything, one would suggest, but the summary again on that one could be quite interesting. I'm interested to have a look at these today. The pound yesterday in particular, I want to have a look at the pound. The pound yesterday got some incredible numbers. Their earnings index was good. Their unemployment rate was the best, I believe, since 1974, 75, something in that order. And as a result, the employment rate was the best ever. Best ever. Employment rate, I think it was low 70% or something like that. That was pretty cool. So it's had some great news yesterday, yet, as we spoke about yesterday, it got a positive bar, but not what you would expect on the back of those numbers. That really does indicate to me that the pound is under pressure right now. So going back to that, the day, or the news of the day for the pound being the CPI figures, if that comes in on forecast or even off forecast, a little bit less, and nothing substantial happens in here, I can actually see more downside to the pound, and that's kind of where my bias lies at the moment. If these figures aren't enough to push the pound up, then average or less than forecast numbers here, or even on forecast numbers here, surely will put the pound under a bit more pressure. Of course, the flip side of that, if you're thinking about against the US dollar, then the trade wars get in the way of the road as well, and then you've got the FOMC pre-buying, etc. So it's not crystal clear, is what I'm saying. But sterling itself, forget which cross you're trading against right now, or you choose to trade it against. I think that is probably my best case today, is a weak pound, and providing these numbers don't exceed expectation. All right, so let's leave the fundamentals alone for a bit. Of course, unless anybody wants to talk about fundamentals, then please feel free so to do in the chat box, and we can go there. I'm going, however, right now to have a look at some charts and see if I can make sense of what I've just been talking about. And that being, as I said before, the market sentiment. Well, actually, let's stick here for a second. I like to look at the market, what the market's doing in the past or since it opened. This is kind of my daily routine, guys, which I guess if you're interested, you don't get to see too much. You may not be interested, and that's fine. It's very, very difficult for me to know who's in the room at any given time. So I don't know whether I'm talking to people who have just come to their trading journey, whether I'm talking to people who have been trading for 100 years, or whether I'm talking to people who are just at the intermediate level. So if you want me to shut up at any stage on basics or go further into basics, then please let me know via the chat. So well, let's go back to Monday, Tuesday, if you like. What's happened in the past 48 hours? And I think this goes to pretty much what I've been talking about. In 2 days, we've seen the euro move 2 pips. In 2 days, we've seen the pound move 44 pips, both to the downside, I might add, but that's significant. I think, the 44 pips is a little bit significant, but, not over the top. It's really not overwhelming. It's not shouting at me saying, wow, this thing's in heaps of trouble. But the comments I've just made regarding what fundamentals could do to this and what they have already not done to this cross is quite remarkable in my book. Normally you would look to things like the yen versus the dollar to get an indicator of whether we're in a risk-on, risk-off situation. Past 2 days have done nothing, as they haven't on dollar Swissy. There's a bit of a line ball there if you add those together. So there's really not a lot happening. Since the market opened this morning, we've got, again, a weak pound. That seems to be agreeing with what I've just been saying. We've got a dollar, an Aussie, and a pound. The only thing there that you can kind of read in is the pound is less weak, if you like, against the yen than it is against the dollar, and therefore we've got a weak yen, right? That's the only conclusion I can pretty much draw from here. We've got a weak pound and we've got a weak yen. Everything else, I don't really come to any conclusions looking at these charts. You could say that the two antipodeans, the Aussie and the Kiwi, are off a bit as well, but it's not substantial. It's absolutely not over the top. So what is the market sentiment? Are we risk on? Are we risk off? I can't draw any conclusions just by looking at those two things. There will be indicators that everybody, well, not everybody, that people tend to use that will gauge what market sentiment is. I tend to just get the vibe, and the vibe is giving me very, very little. I don't have the vibe. I'm not seeing anything that is absolutely conclusive, and nor do I see anything that's even indicating to me, apart from the pound, that there's something in the wings. Okay, that said, let's take a look at some charts and see exactly what I am looking at. Now, this looks absolutely gorgeous to me right now, but there's a fair bit of water to go under the bridge before I can make a call on this one. Now, I don't know if you guys have been in the show Monday and Tuesday, but I've been begging is a very hard word. I've been requesting of the market that it gives me Aussie US dollar, I'm talking about, that it gives me a test of the weekly pivot and then a reversal bar. Well, yeah, well, there it is, but we're about 13 and a quarter hours away from that being tradable because it's a daily bar. What if it snuck away on me on a smaller time frame? Well, it could so do. But when I see something like this, a big bear bar followed by a decisive bull bar crossing a pivot, in particular the weekly pivot, it gets me all excited. And the reason I get excited is not because I think it's going long. It's because I think if it comes back underneath the weekly pivot, it's going short. And this is not a prediction, of course. It's simply a cause and effect thing. It's pretty much the way I trade mostly. It's cause and effect. So what I'm saying is, if price comes here, I think it will go here. I'm not saying price is going to leap from where it is now and go to here. There's a big difference, because I'm not willing to trade short here, but I would be willing to trade short here. Big difference. So that's kind of what I've got in my mind at the moment, which is completely counter to my bias over the past 48 hours or so. But that said, the Aussie has copped a bit of a hiding, fundamental-wise or news release-wise, over the week to date. And there's more news tomorrow with unemployment or employment figures coming out on the Aussie as well. So anything could happen here, but the Aussie is definitely under pressure, and you can see that this ascending channel has now been broken quite decisively. That was news this morning, I would suggest, or was it? Yeah, timing's about right. So that would have been when the Reserve Bank deputy was speaking. Clearly, that speech wasn't terribly exciting to the market, but since then, interestingly, the market has come back. So this bounce off the weekly pivot that I've been looking for all the week may well be in play. But as I said, to trade this long for me right now, well, I could do it, but I'd need to see two things. One, I would need to see price close back in this channel. And if that were the case, I would then like to see price retest the channel with a bearish bar. Then I would look to trade it long, but there's a couple of caveats, and one of them is I've got an untested daily pivot dead ahead of me. I wouldn't trade into that without taking something off the table. That's just experience telling me through my wallet that that's not a cool idea. So I wouldn't be doing that. Wouldn't be trading into the daily pivot without banking. So I need some room here. That's what I'd like, some space. So let's look for a close, maybe around about this level, and then a retest. That would give me enough space to take profit, get something off the table, and then if price bounces off the daily pivot, there's no big deal. So that's probably where I'm at on the Aussie. But to be absolutely fair and honest, what I'd prefer to see happen is nothing. And I know that's not easy to put into your brain, but if I saw nothing happen between now and tomorrow morning, I would look to trade this long anyway as a bounce off the daily pivot. What I've been looking for the last 2 days, or this week, if you like. So that's the Aussie. That's going to be the plan on the Aussie. Can I trade it short? Is the question, given what I've just said. Look, there's absolutely no reason why, apart from two things. Two things. One, I've just mentioned it. The nature of the daily pivot being untested really bugs me. Why? Because the daily pivot is tested more often than it isn't, and that is a definite consideration. So trading away from that is not a great idea, in my humble opinion. You also see that there are pivot marks on my chart, and when I'm trading intraday, well, when I'm trading generally, I suppose, but most certainly intraday, when I'm looking at these pivots and I see that we've been through daily support level 1, we've been through daily support level 2, and we're not that far away from daily support level 3. If I were to enter the market here, not a good idea. So I won't be doing that, and they're the two reasons keeping me from placing a short order here. As I've mentioned prior, that is a setup that I do like, but it has to be contextually correct, and it is not. So there we go. I can wrap the Aussie up there and say I ain't going short right now. I may be going long, depending on what happens with the next Let me have a look at it on the smaller time frames. Yeah. So, a close about here and then a nice bearish bar, maybe an even engulfing bar or something that tests a level. That level there would be fine. There's not much more. It seems to be getting away pretty quickly, doesn't it? Stop, you little fella. Stop. Yeah, I don't see a great level apart from that one. So if I've got a bar that retested both the bottom of the range, I call it a range, it's a channel, and that horizontal level, which is 70, 79-ish, I'd be happy with that. But it's now getting too close to the daily pivot. We've got to close back here somewhere. Okay. Euro we've spoken about in exactly the same fashion as the Aussie for the first part of the week, and what we were looking for here was a test of 113.60 / monthly pivot. Both would be perfect. Then look for a pullback, and happy to trade that. I don't have any qualms about trading the pullback. That's fine. I need a couple of things going in my favor, of course, in terms of a setup. We've kind of broken that. We certainly have on a smaller time frame. That I'll call it a support trend line, because it is, I suppose. If I put it on a 4-hour chart, it looks something like that. And we appear to have broken through there right now. So that's interesting. Potential trend change. Potential reversal. Not strong signals though. A little bit of a double top, a little bit of a tweezer top sitting there, but very, very small on a 4-hour chart. What I would like to see, what would I like to see? Probably not on the 4-hour chart. Something more pronounced than that. When I say more pronounced, what I'm talking about is, certainly I've got a double top here, if you like. I like to see a general direction. So a couple of lower highs, a couple of lower lows, 1 or 2 is fine. Then come back and give me the lower high, rather than, just straight away give me a lower high. It's too soon. I need the market to actually creep away from this area, then put in the lower high. That kind of confirms to me that the market is serious about not going further to the high side. So this is a very ugly chart, very ugly chart. All of these mixed signals, high test, low test, high test, low test, doji, spinning tops all over the place. We've got a couple of decisive bearish bars. We've got 1 or 2 decisive bull bars, but really we're absolutely in the same spot, and we have been all day pretty much. So this candle is not going to help the situation. It looks like it's going to close as a doji or close to there too. So that kind of rules me out of the game for a little bit. It doesn't give me what I want to see. It's giving me potential for a lower high, which is a retest of this trade line or trend line, if you like. That's good, but the candle's crap. The candle, to trade that candle, I don't mind the size of it so much, but the shape of it's dreadful. We're kind of getting this trumpety situation where we're getting outside bars. We've had a lot of inside bars. Now we've got an outside bar that doesn't tell me jack. I guess the only thing it does tell me is that it's a retest of the broken trend line. On that basis, you could probably be forgiven for thinking, a break below here is probably start of a bear run. But what are we trading into? I don't know. Yesterday's daily, but it's just ugly. I don't like it at all. But I don't see what I can do from here. That's the hourly chart. What's the 30-minute chart telling me? Yeah, look, it was probably a little better. That's probably a more tradable bar than is the hourly. But yeah, the hourly is not very friendly, or the second half of the hour wasn't very friendly. It's too hard to take profit there. You're trading into the low of the day. Yuck. It's just yuck. And to be fair, I don't know what I need to see here. Maybe I need to see this confluence area tested, and maybe we get a false break here. That's probably what I need to see. So let price get up to here, smash it, find the resistance, get back underneath it, retest it, then look for the short. That's kind of where I'm at on the euro. Is it possible to trade the euro long? Well, I'm not a fan. I'm not a fan at this level. Let's go back to the 4-hour chart, where it's pretty clear that 113.60 has been holding, and there's no surprise in that. 1, 2, 3, 3.5, 3 3/4, trying to get through it, and they just can't, despite the fact that there's another major level, that being the monthly pivot above. But it's really not rejecting it in a massive fashion either, is it? This is just really, really frustrating stuff. You could call that a little flag pattern, indicating that it's likely to break to the high side. I can't argue that. I really can't, because I'm not seeing what I need to see. And what I need to see is some selling come in, hit some support, then come back, hit some resistance, then look for the short. Really, it's just ambling its way down here. It's not giving me any direction at all. So I'm not a fan right now, but I'll keep my eye on it, because exactly what I want to happen, we're in exactly the right place for what I want to happen, is what I'm saying. So sell, get some selling going on, then curl back here, hit the resistance, then I can look for the short. Cable, as I said, I think is under pressure, and if these news events don't go the way of the pound, or even if they're neutral, I think we're in for a little bit more pound weakness in a dreadful space to try and trade that. However, again, and I know I did this on euro yen the other day, and I really need to kick myself in the butt for that. It was a bad trade on euro yen on the daily chart, which was yesterday, I think. Trying to trade at these levels short is really a suicidal sport to take on, and as a general rule, I just won't even entertain the thought. But I thought I was playing something different yesterday, and I was wrong, as the market will continue to tell you. And here we are again. You know, the best place to trade short is always at resistance. So if you fancy trading short the pound, then that was probably the bar for you. But then you've got to trade into the daily pivot, which knocks you back. Fortunately, you would have stayed in the game, and you might even have a little bit of profit in the bank by now. But is that going to last, is the question, because of course we're back again at the bottom of the range. So me, as a range trader, would be looking not for short here, but for long. And I'm happy to do that. A couple of reasons I'm happy to do that. Number one, despite the fact that I think the pound is under pressure, and if unless there's good news, and extremely good news, I think it will fall. Technically, I don't have a reversal pattern. Now we're in a bull trend, and we've been in a bull trend for what? Let's say the bull trend started here, shall we? Just before Christmas. So the pound has been, I won't say on a tear, but it's certainly been giving us a pretty good cycle to the high side. Why now do we think it's under pressure? Well, you name it: Brexit, trade wars, bad news, FOMC statement, you name it. You know, all the usual suspects are there. But really, what I need to see, if I'm thinking reversal, is a reversal pattern of some kind, and I just don't see that. Rather, what I see is a continuing cycle of higher highs and higher lows, and nothing's changed that. Absolutely nothing has changed that. I don't see a bearish engulfing bar here. I don't see a double top here, or some would argue that might be. And I don't see a head and shoulders here. I don't see a shooting star here, an evening star. I don't see anything that suggests to me that this rally, or this what do you call these things, bull trend, is done. Slowing down maybe, but I don't see that it's done. So retracement, yes, definitely see that. Where to? Maybe the monthly pivot. That would be a reasonable place, I believe, to suggest that there's more upside from. In fact, that would probably be the favourite place, I would think. So really, that's what I've got in my mind. Yes, I'm thinking bear today, but bear to here, and then I don't be a bear anymore until, of course, something suggests that I should be. So I won't say I'm desperate to find price back up here somewhere, but gee whiz, I'd like to. And that was my whole point from the outset. My point from the outset today is market sentiment is really, really hard to find, and so are setups. Setups are just not coming as frequently as you would like them. And for that reason, I haven't been trading too much. And I know Ash has struggled to get into the FTSE as well. So it's a little bit frustrating, I've got to say. What do I need to see happen? I need to see the news, I suppose, mini reaction. So let's say we get a neutral news in, what is it, an hour and a half or an hour, I can't remember, it's 9 o'clock or 9:30 UK time, but I can check that. Let's say we get neutral news and we find ourselves back up here at the resistance level. That's when I'll start to get excited, because I'll be looking desperately for anything of confluence to trade off, and there's probably the best point of all. So if I can get price up to here, give me a false break of this resistance trend line at the daily pivot level, yippee, I've found my place to go short. But that's pretty much all I've got at the moment. Can't go short here, too close to the bottom of the range, too close to the monthly pivot, but I'll try a short from this area here, no problem. So there we go. I guess I'm working out something to do today. I've at least got 3 potentials, even if they are not setting up at the moment. Of course, if this just tanks to the monthly pivot, it's again one of those things. You can't just trade your bias. You have to have some substantial reason to get into the market, and more than one generally. Okay, so I'm a little bit bearish on the pounds, but not totally committed, because I don't see that reversal situation. It really is a speculator if to trade short here, in my humble opinion. But it's backed up by fundamentals, and it's backed up by a nice technical setup if I get that. Aussie CAD, we traded this last Friday actually, entered this one on the daily chart, and we got taken back out yesterday after taking profit and moving our stocks to entry. Had we not moved our stocks to entry, we would still be in this trade and we would still be in profit. It's now Wednesday. It's very, very unlikely to be in trade that long, and the market's pretty much exactly where I entered it. So that's probably telling me all I need to know about this cross, even if the rectangle that contains price action isn't telling me all I need to know about this cross. And it is absolutely and quite clearly in a consolidation phase, and has been for the best part of 2 months. It will break, of course, and that's why I was thinking long here, it having broken from the inside of this channel to the outside of this channel, bouncing off the top, bouncing off the weekly pivot. That was my play. So that looked cool, but now I find that there's a glaring false break here. So we've broken the resistance being the top of the channel. We've come off it, we've come back underneath the break, and we've retested the break and the weekly pivot. So generally automatically I would place an order short under here, but there's a big green thing in the way, which is why I didn't add to my long position, or add an alternate to my long position. So this market is absolutely and utterly untouchable for me at the moment. It's crazy. Hasn't done what I thought it might, and I can't trade it short. So it's a no-no for me. If anybody's got any ideas on these guys, please tell me, because I've got nothing really. I need to see price at a resistance level or a support level before I can look to trade. Really, we're in the middle of nowhere, no man's land. Euro pound, gee, to be nice. It would really be nice to see this get out of here. Speaking of consolidation, and I mean this is only a week long, not even a week long, but look at it. What AMS? Again, high test, low test, bullish, decisive, low test, high test, spinning top, a little more than a spinning top, tiny little candle, and now a break of the trend line. Can we trust that? Are we headed for here? Gee whiz, you'd be a brave man to say I can trust anything here at the moment, given the look of these bars. They're just dreadful, like they are on a lot of crosses, as I said before. What would it take for me to trade this? Not a lot, to be fair, but that lot needs to be distinct, and it needs to be, where are we? 7 minutes past the hour. I'm on a 4-hour chart. We've got 52 minutes before the end of this candle, and then we've got another. So this being a 4-hour chart, if this was to close here at the top of the hour, or in this vicinity, and then we got a bull bar that came back below the trend line, below the weekly pivot, and close on or around the daily pivot, that would be my signal to go long. And I know that sounds crazy to some people, but I have no reason to trade this short at the moment. Double bottom, higher low, higher low. Why can't I go long? Absolutely I can go long. But I need to have that big bear bar first. So that's what I'll be looking for on Euro pound on the 4-hour chart. Can I accept it on anything smaller? Well, I don't really have a confluence of any kind. Maybe I've got something here. I suppose there's a horizontal level through there. Be interesting. If we got a bear decisive bar here, I'll come back to it at the top of the hour. Let me see what the 30 is telling me. Yeah, it's probably gone too far now to give me what I need, but I'll certainly come back at the bottom of the hour and have a look at this one as well. Should it be, and it'd have to be a big turnaround now, a bearish decisive bar, maybe, just maybe we can have a look at it, but I'm not excited. Okay, Euro Yen. How committed to this am I? The short I'm talking about. So yes, I told you yesterday, if you're in the room, that I'd make, and I did make it. I think it's a mistake. It's hard to say that word at times. It's like the W word. I was wrong. I was certainly wrong, and I was wrong to trade here, to be fair. And as I said, earlier in the show, what on earth made me think that I had a right to trade short? I'm at the bottom of a range. I know I was trading on a daily chart, but I was actually trading a 4-hour bar. So that's definitely in play. And it's a bad trade, a really bad trade. But I was overwhelmed by what I saw here, and that's really not the way I normally trade. I was overwhelmed by a succession of higher highs here that were all false. And if I get another one, I'll do exactly the same again with one small change. I'll trade it from here, not from here. So I'm dead set keen on this. I'm still keen to trade it short, but I have to have something that agrees with my bias. I've got the setup I want. I've got rising highs that are all failing after a reversal situation. So I'm absolutely in the box seat here to trade this short if I can get a setup at this level. The one issue that besets me is price looks like it wants to go to here, and that's fine. If that happens, then my setup is not a setup, and that's what I've got to guard against. I've got to guard against being in a position where that could take place. So what I need to see is price get back into here and then give me a lower high. My fear is that this won't happen that way. My fear is that if this goes as I think it will go very quickly. So that's what I'm fighting against here. I'm fighting against this candle right now, not the current one, the one before it. That could be the one that turns this around. But to trade that is not a great plan. Why? Well, where's the confluence? Where's a reason to trade that? It's a candle sitting in the middle of nowhere. So I just don't have the right to trade it. Although my bias is completely counter trend and short, I still don't have the right to trade it. So I didn't have the right yesterday, but I did. And I only risked 0.25% because I was fully aware that I was in a bad position. But yeah, I just went off half cocked, I suppose. Not a good look for a person who's been trading for 12 years. So we won't do it again, guys. I've got this sitting here and I'm just waiting and waiting and waiting. I don't think I can afford to wait for the 4-hour chart to give me what I want, because it's going to have to come into here, then give me another candle that is a lower high and a reversal bar. So I'm probably talking middle of the night for me at the very least. And if it, as I said, if it goes, it could go very, very quickly. So I need to find something on the smaller time frames that gives me the right to trade. And at the moment, still not there. But at least now I have the opportunity of a confluence area. This being the hourly chart. So what I need to see, guys, is price get back under here and then just retest. Any retest here gets me going. Break, back, retest, short. And I would take profit quickly for probably about 1/3 of the position. Then I would take maybe another 1/3 of the position off here. And then I would just let it rip. Wouldn't change a thing from there. Everything would remain the same. So that's Euro Yen. And if I can find a way, I will find a way. 1/4. We've got about 15 minutes to wait on the 30-minute bars. What have we got here? Euro CAD. Kind of don't like it too much. I guess there's a range. I guess there is. It's a bit ugly, but we'll put it in. Through there somewhere, but you get false break. Again, if this is a false break, it will give me the indication that or buy coming back into the range, retesting the top of it maybe, then we can look to play it short. you've got very little room between where that may happen and the pivots on the 4 hour chart. So again, I'll be going down to the lower time frames and looking for exactly the same thing. We've got a support area here, so we could have something like break, retest, short. I'd be okay with that. Why not? Got a succession of equal highs. So double top, quadruple top, whatever you want to call it. So I'd be happy with that, no drama. And obvious target here on the 30-minute chart would be the pivots. I'd be prepared to close all at that point. That's Euro CAD. Okay, pound yen. Wow, we got pound news in an. Hang on, let me check that. I was going to check that timing, wasn't I? Pound news happens at 9 or 9:30. I think it's 9:30. Wednesday, 9:30. Yeah, so we've got an hour and 15 or 13 minutes now before that news. So there's a chance to get in the market before that happens. Yeah, that's the 4 hour chart. I'm looking at them thinking, okay, there's a definite potential false break happening here, and it is still the case, I guess, on this chart as well. This being the hourly. Yeah, it's kind of gone. Not really what I want to see. I want to retest with a bull bar, and I haven't got a bull bar, so. Yeah, although I can see there's potential for that to be a false break, I can't trade it now. Maybe I could on the 4 hour chart if we got a bull bar. I think the news would wreck that setup, or maybe the news could actually make that setup. So that's what I'll be looking at. What I'd really like to see is this candle take out these lows and then get a bull bar back to the trend line. That would get me excited. Trading short to the weekly pivots. It is counter trend. We do have a double top-ish. I won't call it an outright double top, but it looks double top-ish. Winning a succession of lower highs and now lower lows. So potential for this to reverse is there. I think finally for now, we'll look at dollar yen. This is the weekly charts, which is telling me very, very little. This is the daily chart, which is also telling me very, very little. Well, it's telling me something. It's telling me that this doesn't know where it wants to go. It is up and over, up and under, all over the weekly pivot. And we're getting very, very close to the pencil, or the pointy end of the pencil, there's no question. So the propensity for breakout is getting stronger and stronger. However, which way, guys, and why? Well, the way I read it, double top at resistance, lower high at resistance. What are we doing here? And why didn't we trade this one short at this point? I don't know. To be fair, maybe because it was straight into the weekly pivot. When was this? Last Friday, was it? Yeah, that's probably why. I traded the euro yen short instead of this one. That's right. That was a bad mistake. I might have even got a little bit of profit out of this one. No, not really. And again, right place to trade short from if the weekly pivot didn't exist and this support trend line. But yeah, really, that's all I've got is double top at resistance. There's a confluence area, no question, and I've got a lower high. I don't mind that. It's quite a decent scenario, but it's got too much against it as well. I wonder if I got another lower high, would I have the same attitude? We'll see. It's going to break, isn't it? I'm trying to talk myself into something here. What's the 4-hour chart telling me? Yeah, I think that would do me. And my thought is get up to here, break, find the resistance level, get back underneath, retest it, then go short. As always, the best place to go short is at resistance, and at failed resistance, even better. So that's what I'm looking for. Still gives me the lower high if I don't obviously take this out. I'm okay with that. So that's going to be dollar yen. Ooh, I've been talking for nearly an hour. That means I need to have a little sip of something. So guys, I'm going to just pause for a few moments. If you've got anything you would like to discuss, then please do so in the chat. And when I come back after my little swallow, I will address those points. And if there's none there, then well, I'll do something else. We'll talk about what we talk about. I talk about the Aussie. We'll have a look at the Aussie when we come back. Give us about 5 minutes, guys. I'll be back just before the bottom of the hour. Okay, back with you guys. Let's have a look and see what the 30-minute charts are telling me. Are they giving me anything to go with? Not that candle for the Aussie. I'll come back and do a bit of commentary on that. The 30-minute bar on the Euro. I think you know what I'm going to say. It's garbage. The 30-minute candle on the pound is also a rough candle and untradeable. Aussie CAD. The candle's not so bad if it was down here somewhere, but it's no good where it is. So no trade there. Euro pound. Same. These are typical candles for the first 30-minute candle of London session, I might add, where you get all sorts of different directions in the same bar. This one, blue. It's rough, but it's a bearish engulfing bar, lower high. Nothing to trade with. Yeah, it's got to get back in here. It's got to get back underneath this trend line. And then, perhaps, but I'm keen, as you know. Euro CAD, and again, needs to get to this confluence area, hasn't. Pound yen. I was going back here in time, and this is exactly what I talk about. You know, the false break back, and the retest. Dreadful candle, wrong place, couldn't trade it. Just the frustrating. You know, I started this session with, you know, how frustrating it was because of lack of market sentiment or the inability of myself, I suppose, to read what the current market sentiment is. I don't think I'm alone in that, to be fair, but not only that, it's very much a case of partial setups and, you know, just in the wrong place here to trade short. But there you go. Break the rules and you're probably a winner. Tried to do that yesterday, it didn't work. Dollar yen, let's go to the 30-minute charts. Yeah, well, no. Everything's too small here. It's like the land of Lilliput. Bias is short, by the way, and to trade long here into resistance is just stupid. So I'm not going to do that. I do, however, see acceleration points both here and here, but that's not good enough to trade. I'll just go a little bit further and see what these others are doing. I haven't really done any analysis on them, but I'll just see where they're sitting. Euro Aussie, that's interesting. Yeah, okay. It's been a heck of a day so far, hasn't it? Aussie Kiwi. Also, although for a different reason, that's just going. Wonder why. Kiwi must be in a bit of strife. How much we travelled off the bottom? Only 30 pips, but that's a fair bit in context. It's kind of for that reason I don't want to go long. It's setting up for a break here. What would I like to see? You don't know what I'd like to see. I'd like to see this candle break here, take out this high, then get a subsequent bearish bar that came back and retested, this area here, the confluence area, where price is currently, would be absolutely just fine for me. So Aussie Kiwi on the 4-hour chart, that would be okay, but it is asking a bit, given that we've had these two big bull bars, and if this turns into a bigger one, we'll see. But that's what I need to see. I need to see this break and then a pullback to retest it. Aussie yen, we haven't spoken about Aussie yen. The daily chart is very much a sideways mover. 4-hour charts is you're not seeing anything too exciting there either. I'm trying to get a bias here, and really, I guess you've just got to call this a deeper retracement on the higher low cycle. But it has taken out this low, and that's kind of interesting. We're now getting a sequence of lower lows, lower highs, lower lows. So this becomes important. What happens next? Do we get the lower high, or do we get the higher highs taken, or the highs taken out? Question. No answer at this point. And that's where I finish the run through, guys. Hi, Christo. Just joined a few minutes before. Can you show how you measure stuff, e.g. risk reward, correlating movements, etc.? Sure can. Okay, let's go to the euro, for instance. We'll start with the 4-hour chart and see what we can find. Depends on which part of the strategy I'm trading, by the way, Christo. If I'm trading the 30-minute chart, pardon me, what I'm looking for is a safe position as quickly as I can possibly find it. So let's say we wanted to go, let's try the 30-minute chart to start with. Let's say we wanted to go something that even looks feasible. All right, let's say we wanted to go long off this bar here. Okay, we've come below the daily pivot and we've closed back above it. So we fancy that we've got a potential bounce on here. What I'll be looking for is the size of the candle. Now on euro dollar, a 5-pip candle ain't too big. Generally, I'm looking for something 10 to 30 pips in size, and there's a very good reason for that. The reason for that is that on euro dollar intraday, let me come up with a blank chart. It's going to be easy to show you. Euro dollar. I don't have a blank chart. That's blank enough. That's exactly what I wanted, actually. All right, the reason I do this, and this is very much part of what I teach when I'm teaching, is that if you look at these levels, DS1, DS2, and DS3, and of course going the other way, DR1, DR2, and up here somewhere there'll be DR3. Now when I'm trading a 30-minute chart, I'm very cognizant of these levels, and there's a very good reason for it. The reason is that you go back in time and go back and do your back testing for however long you want to go back and back test, you will find that on euro dollar, the daily pivot number 1 is tested 70+% of the time. Now, I don't care how far you go back, you're going to come up with something between 70 and 80% of the time. Do it. Do the exercise just to prove me wrong, and tell me if you can. And look, you might be able to pick a section of the back test that will go outside of that. But if you do it over an extended period of time, you're going to come up with that percent, right? You're going to come up with that number. Now, for the very same reason, DR1 and DS1 is also tested a percentile of times. Outside of that area, DS2 and DR2 are tested far less from a percentile point of view. So what that really says to me is, where is the highest probability taking place? And the answer, logically, has to be between DR1 and DS1. And if you go back, and I'll do a quick exercise for you. And I know this is a long way around answering the question, but it really is to the point of the question. Let me do this for you. I think it's 1, 3, and I can't remember the numbers now. 1, maybe 2, 4, 6, maybe 2, 4, 6. We'll try. We'll make 2 green. We'll make 4 red and see what happens. Where's 2? Oh, there we are. Okay. And we'll make 1 green. We'll make 3 red or crimson, whatever. And then we have to show all support and resistance levels. True. I'll make them a bit thicker. Go back to common colours. There we go. So we want thick, just so they stand out. Thick would be width, wouldn't it? 3, 3, 3, 3. This is a great exercise for you, by the way, no matter what chart you're trading or what your strategy is. It is a superb exercise to do. Let me... The other one looks a bit faint because it's dark green perhaps. Okay, let's make it green. There you go. It's a bit better, a bit easier to see. So what the point of this exercise is, here's the daily pivot, right? Here's DR1 and here's DS1. How many times do you see on this chart in any given day has price gone outside of DR1 or DS1? Tried here, false break. Tried here, false break. Tried here, false break. Tried here, eventually a false break. Where's the daily pivot? Did there. Successfully got outside there and went on with the job. Didn't here. So how many days have I gone back? 1, 2, 3, 4, 5, 6, 7, 8 days, and it's done it once. How many times? Obviously we're in a bull trend, so it's not going to go outside DS1. But that's exactly the point I'm making. The point I'm making is euro dollar does not spend too much time away from the pivots, is what I'm saying. So when I'm trading intraday, no matter which direction I'm trading, if I'm trading from anywhere near the daily pivot long, I know that somewhere in the vicinity of around about 15, 20 pips, depending on what the price has been doing the previous day, I'm going to find resistance. And that will be DR1. Same going the opposite direction, DS1. Now again, if we've had a very big day, that might stretch out 30 pips, and that's fine. And that's why I said before, when I'm looking for candles to trade, I'm looking for candles that are somewhere between 10 and 30 pips, because I know that if I'm trading a 30 pip candle, the chances of me getting 1-to-1 are remote, absolutely remote, because I'm going before I hit resistance. And because I hit resistance, I know that that level there is going to hold the market. Now, I don't know for how long it's going to hold the market, but I know the market's going to come off it, because it does so each and every day, bar a few, where it gives us a false break. Does it all the time. So that's my reason for trading only to resistance on a 30-minute basis and then getting out. So if that reward happens to be 15 pips, 20 pips, 30 pips, depending on where I'm entering the market, that's enough. And going back to the risk part, that's the reward part. The risk part, somewhere between 10 and 30 pips, gives me somewhere between 3-to-1 and 1-to-1. Now, let me destroy you, or destroy your thought process at the moment, which is thinking, oh, that sounds reasonable. Because what I do is take profit very, very quickly. And if there's any sign of resistance, let's go into the 30-minute chart and I'll show you what I'm talking about. But I hate it when that happens. There you go. Okay, so use this candle. If I'm looking to go long here, and I know I've got DR1 up here as my target, right? Because of what I've just said. So let's assume that's a 10 pip candle. Let's say it's down here, the tail's down here, and I've only got 1.5-to-1. That's okay. I don't mind that. I'd still take the trade, but in between that area, I've got resistance. I've got natural resistance in the highs here. So say that level there. So if I can't take profit here of at least 6 pips, why 6 pips? It's just a nominal figure that I use, because it's roughly 1/3 of the distance between where I'm expecting to get into the market and where my target will be, and in a worst case scenario. Okay, so if there is resistance here that is less than 6 pips from my entry, this one isn't, then I wouldn't take the trade. But I would take the trade here, because I can close my first profit level here at 6 pips and get, generally on a 30-minute chart, I will take 55% of the position off the table. So if I'm risking, let's say 10 pips, let's say 12 pips and make it easier, and I'm taking 6 pips off at 50%, then I'm reducing my reward on this trade dramatically, because I've only got 0.45% left to go to the target. But I don't care about that, because if I can maintain a win-loss ratio of above 65 to 70%, which is not that hard to do on this strategy, then I'm going to win. If I can maintain an 80%, which is generally where I'm targeting, if I can generally trade around the 80% win-loss ratio, then I can win handsomely, because that's all worked out. All those numbers are being crunched, and that's what I'm aiming for, an 80% win-loss ratio. And that allows me to take this early take profit, which gets me into the market, gets me into a safe position very, very quickly. So as soon as I take that first profit, I move my stops, wherever they were, to the same amount that I've taken off the table. So if I take 6 pips off here, I move my stop 6 pips from entry. And therefore, the very worst thing that can happen is I've made 0.05% on the trade if my stops are hit. If they're not, on a 15 pip targets, on a 10 pip candle, I've made 1.5-to-1, generally divided by 2. So I've actually made 0.75% of 1%, on that trade if I'm trading 1%. Now, how much have I confused you, Christo? Or is that now an answer to your question? And I'm sorry it took so long to explain it, but that is exactly how I work out my reward. Well, I don't work it out anymore. It's all in my head because I know where the resistance is, I know where the support is, and I know how big the candle is that I need to trade to get my generally around about half to 3/4 of what I'm chasing. Does it make sense, Krista? Or have I completely confused you? I think Christo's passed out. I know Ben's here. I look the same thing, Ben. Just go back and do the exercise, mate. I've done the exercise on euro dollar, and I come up with those figures, 70 between 70 and 80% that it tests daily pivot, and it will also do exactly the same. You can work out exactly the same. The way I work it out, right, is just go back. Let me get rid of the rest of these. Let me get rid of these because you can do them exactly the same on each one, and it is a worthwhile exercise to do. Okay, so let's use the 4-hour chart. Let's blow it up a bit. Sorry about all these lines. Where are they coming from? Oh, okay, there's the levels. Horizontal levels, get rid of them. No, they're not. They're the pivots, sorry. No, they're not horizontal lines. Why are they there? They're on the pivots. That's kind of weird. Let me try this again, sorry. They're not there. There we go. Did you see the process by the way I get there? Go to inputs, show all support and resistance levels true. You probably know how to do that anyway. And then just choose the colors that you want. 1, 2, 3, 4, 5, 6, depending on what level you want. They still didn't go. I hate that. One more time. Why didn't they go? Horizontal line, you dope. Okay, maybe that's the way to go. Sorry about this, guys. Okay, here's the way to do it. Simply open, and I use the 4-hour chart, it's easier. Go to your chart and simply do this. I haven't got a pen, but on your normal trading platform, you may have a marker. All you need to do is put a tick where the daily pivot's been tested. So tick and tested means there's a candle touched it, right? Tick, 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 cross, cross, tick, 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 cross, tick, 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 tick. Have you got the idea? So count the ticks and count the crosses. And believe me, no matter how far you go back, you will find, as long as you're using a decent period of time, let's say a month or 2 months or 3 months or something like that, you're going to come up with that number. So that's the way to work it out. Just put ticks where the pivot's been tested and put crosses where it hasn't. Do the same on DR1, do the same on DS1, and you'll come up with a percentile. Simply put the ticks over the crosses and multiply by 100 to 1. and there is your percentile. That's the daily pivot is tested, and on euro dollar, that is a big number, somewhere between 70 and 80% all time, and it changes very little. Now, before you go off and think, okay, well, as soon as the daily pivot's not tested, guess what I'm going to do? I'm going to trade to the daily pivot. It's a great point to have in the back of your mind, but it's not a great thing to do ad hoc. You have to wait for resistance to be hit. If you're going to trade short, you have to wait for a setup, etc., etc. You just don't jump into the market based on a probability factor, because we don't know when that is going to happen, right? So if you're trading short here, jump in the market short, whoops, and then eventually it comes down. But you know, timing is everything, and always is everything. So yes, have it in the back of your mind. And the way I teach it is, once you've gone into a day, for instance, let's say today, we'll use today because it is current, and let's say you start to do your analysis here, right? And your analysis says that okay, we've got an untested daily pivot. We know that that's going to be tested 70 to 80% of the time. Do I have a setup? If the answer is yes, you do have a setup, then absolutely trade it. But here's the thing. The thing is not so much to trade to the daily pivot. It's don't trade away from the daily pivot when you're in that position. In particular, if you're at a DR1 or a DR1 level or a DS1 level, because the probability of you going short with an untested daily pivot above you, especially later in the day, and ditto long if the daily pivot's untested below you, ain't a good idea, because of those overwhelming numbers that I've just shown you. You know, it's not something that I'm just dragging out of the top of my head. This is something that I've worked on for a long time. A bit above my pay grade, but it's a good start into how more experienced traders do it. Yeah, Christo, look, keep asking the question, and I'll just keep bringing it up every now and then and show you. It's a shame the market's like it is, because I can't find a trade to take. Certainly, and here's the reason. You know, it's all over the daily pivot, so I've got no advantage here. I would have had an advantage here this morning, but I don't trade at that time of day, so the advantage is gone straight away today. But here yesterday, you know, don't call that a tested daily pivot. No, I won't complicate things. I won't complicate things. But you'll find that early in the day is not a great test of daily pivot. Rather, the daily pivot has come to the price. That is the reverse. So when you get up here, a long way from the daily pivot, and it's still sitting there untested, your bias needs not to be long, is what I'm saying, because that's the danger zone. You're trading way against probability by going in that direction, and that's the key. That can save you a lot of bucks by not trading in the wrong direction, if you have that information. But you know, do the exercise on any cross that you like, and if they stack up, you know, if the numbers are telling you, you know, high percentile of the time the daily pivot's tested, for instance, or price doesn't go outside DS1 or DR1, for instance, then you know what to do. And again, think laterally. Don't think, okay, the daily pivot's untested, I've got to trade to the daily pivot. Think reverse technology, if you like. And I can't trade away from it. That's the thing you need to focus on. Don't trade away from it when it's untested, in particular if you're at an important level or it's getting late in the day. It's not always going to work, but it's going to work a very high percentage of the time, as I've just shown you. Okay, so Ben, I hope I've answered your question. Just most of the dollar pairs, yes, it's very much close to the money on. the miners and the exotics, they could do anything at any time. But now you know how to do the exercise. It's very, very easy to do. So just ticks and crosses, and divide and multiply by 100 over 1, and you've got the percentage. Righto, guys, quick look. It is 9 o'clock in London town. So what do we got? We've got something there that's interesting. Oh, what a bugger of a candle. Had that been a decisive bar, yeah, there's not much room though, is there? I said that before. It's not even 1-to-1 to the daily pivot, and it's a small candle. Look, the signal's telling me there's an acceleration point here. We've got an untested daily pivot, but I'm also trading into the high of the day without profit, and there's not enough profit to take before the daily pivot, so I'm not going to take that trade. Euro dollar's a junkyard, don't want to know about it. Cables come to the bottom of the range. Something tells me the boat has sailed on pound US dollar for me today. Had a bearish outlook, and it's already gone ski. Now again, the later it gets in the day, depending on how news works out, if I were to get a setup here, now the setup would look something like back inside the range. I'd like to see maybe a little bit more selling down to the weekly pivot, then get back inside the range and a higher low here. Consider that to be an untested day. I would consider that to be an untested daily pivot. So I'd be more than happy to take that position if that were to be the case. I suspect that won't be the case because price will just keep falling away here unless that news is really good. But that's the setup I'd like to see. Aussie CAD, no real interest here. There's middle of no man's land. One thing I would say is we're coming off. Let me have a look at the daily chart. Yeah, I gave you a bit of commentary on that earlier. It really is in no man's land now, and whilst my bias is still probably long, I don't see a trade here anymore. So it's not for me. Where would there be a trade? Not on a daily chart, certainly. Let me go to the hourly. No, it's got too much work to do. It's all really speculation. Euro pound. Get up there and then give me a nice reversal bar. That's what I want. But again, I said this before, if there is a bearish decisive bar here, in particular, if it closes on or around the weekly pivot and the daily pivot, having tested either or both, then that would be my cue to take a long above that candle. So you'd be risking about 30 pips. Rewards about 60. Perfect. That's what I'd be looking to do on Euro pound today. Euro yen, if that got back under here, as I said before, and retested the trend line / top of the range, there's a short on offer there. Euro CAD, I don't really like the cross. There's too many breaks here. I think that range is probably more relevant to a 4-hour chart than it is to a 30-minute chart. So 4-hour chart, we've got a clear toppy pattern here, back underneath here, lower high, short. Pound yen, yeah, there's that situation, isn't it? Again, the false break is clear, but the signal is not, because it's not a decisive bar, and we're trading straight into the daily pivot. Not a good plan, but there you go. There was money to be made there on that one if you had the kahunas to take it. same here, I suppose, in terms of what I'm looking for. Let's break out here, back underneath, retest, short. Euro Aussie's too much of movement there to get me interested. And the Kiwi's got to come back here. If it did, maybe I'd think about it, but I'd rather not trade this either into the resistance area. No thanks. Guys, that's about it. I'm going to leave you. I think you've got a fair idea of what I have in my head for the rest of the day, and hopefully there'll be something set up. As I said, look, it's very frustrating at the moment. There's not a lot of setups on offer, and some of them are happening while I sleep. So that reduces the chances of trading even further. Let's hope tomorrow, after we've had a little bit of news, FOMC, the FOMC trade. I should have gone over that one. It's actually 1, 2, 3. It may not be so bad. Here's how I trade this, and some of you might have seen this last month, a few weeks ago anyway. Let me have a look at this. When I traded the ECB statement was. So what I'm looking to do here is trade the breakout, which will be enforced by FOMC. Now you can see that the market is winding itself up, coiling itself up like a spring. And what I look to do is put the market inside a range for this week being Monday to now. So I'm going to call that the top of the range, and I'm going to give it a little bit more. I'll change the color because we're already at 113.60 at that. Color is, let's go with royal blue, shall we? There we go. So there's the top of the range. There's the bottom of the range, and it measures nice 33 pips or 34 pips if you like. So here's the trade, and here's how I would trade this. Now there is a big caveat involved, and I'll give that to you in a tick. What I would do is put my entry long above the range here by 15 pips, which takes me to about there. So my entry long would be at 113, let's say 113.69. That would be my entry long. I'm just writing this down because I can't place this yet. 113.69 is long. Entry short would be 15 pips below this level, which would be 113.05. That would be my short entry. And the stop on the long is the entry on the short, and the stop on the short is the entry on the long. Guys, do you understand that? The long entry would be at 1.1369, which is 15 pips above the range that I've decided is the range. So it brings it up here somewhere. The entry short, so we're trading both ways, right? Sorry, I didn't explain that. We're trading a long entry and a short entry at the same time. The entry short would be 15 pips below that line, bringing us short at 1.1305, which would also be the stop for the long order. So if we got triggered long and then got back here to 113.05, that's our stop, and we're over and out. Now Now this is advanced. I understand that. So if you don't understand what I'm talking about, do not consider taking this trade. Now the next part is very, very, very important. What you need to do is go mid-range between those two levels. So we measured that at 33 pips, I believe. So let's go 33 pips divided by 2, which is 16.5, brings us in at around about 133.37, which just by coincidence is around about yesterday's daily pivot. Why is that there? Well, here's the thing. If you're in front of the charts at FOMC statement time, which you need to be to trade this, you can only place the trade if price is near this line. What do I mean by near this line? You want to be within 10 pips of this line either side. In fact, you want to be in a small range. We've only got a small range. Make that 5 pips. If price is not within 5 pips of this line here at FOMC statement time, you don't place the trade. Why? Because if you get a whipsaw and you're trading and the market's at this level when the FOMC statement is made, it only takes a very small amount to take you into the trade and then whipsaw back. But if you're closer to here, you're more centralized and you've got far more room for error here before you're taken in to the wrong position. Okay, so they're the caveats, or that is the big caveat. Do not take the trade if price is anywhere near the top or the bottom of the range. Now we'll discuss this tomorrow and see how it went. If I'm awake and price is near this center level, then I will take the trade. Unless, of course, we've broken out of here beforehand, which is entirely possible. That's another caveat. If we're broken out of here, there's no trade to be taken, okay? Because we're trading the breakout of this range. That's what we're trying to do. Okay, guys, that is it. Sorry I've kept you a little bit late. Hopefully you've had a bit to chew over there, and if it was a little bit outside of your understanding, I totally get it, because that's fairly advanced stuff that I've just been through there. And just ask me about it again tomorrow, and I'll go through it and show you exactly how it worked, if it worked, and if it should have been traded. Righto, guys. Thank you, Christo. Thank you, Ben. Thank you all for being here. Without Ash, it's always a little bit lonely, and certainly nothing about the FTSE today, because I know jack about FTSE, I'm afraid. Although, let's have a quick squeeze and see how he would have gone. Yeah, I got a funny feeling he might have had a good day if he stayed in front of the charts, because he was looking for short. And wow, he may have had a good day before he got on the plane. We'll see. Thank you guys very much. We'll look forward to catching up with you tomorrow in the show when Ash should be back, and we'll see you then, eh? Have a good one. Bye-bye. Now.